as we reported is June 23rd, 2026. As you can see, our market regime gauges have changed a bit. The current market condition is in a neutral, uncertain condition. The intermediate trend is still bullish. The short-term trend is bearish. We took a little bit of defense in a few of our strategies today as the market gapped down a pretty substantial amount, 1.5%, to open up and just chopped around all day. We'll go through the charts. But we played some defense in the ultra aggressive, aggressive, and moderate aggressive. We'll see how long that needs to stay in place, or if we need to even add more defense. We'll see what happens. Only day by day with our strategy. We'll start out with the intermediate trend. As you can tell, we are still in an uptrend, so our general bias is going to be bullish, even though we are playing some short-term defense. We'll see what happens. Let's jump on over to the short-term trend. We'll talk about this for a little bit. You can see a lot of blue lines that I've drawn across here. They kind of give us an idea what some major support, resistance, supply-demand levels could be. As you can see, this is our candle for today. I'll try to zoom in just a little bit more if I can. Our candle for today opened today, right off the bat, rallied up, then came down and closed right about the same place it opened, where we couldn't get over to the 20-day, and we stayed above the 50-day. So that gives us the uncertain to neutral condition in our market regime gauge. But it's not that exciting that the market opened up, rallied, and then sold all the way back down. So we'll see what happens. This type of action for today would indicate maybe we're going to go lower. That's why we have some defense in place. One thing that might save us is this 50-day moving average. Also, the previous low over here is this line. You know, we're positioned to weather a little bit of the storm. If for some miraculous reason the market turns back up and gets above the high of today or gets above the 20-day, we'll be right back to offense. So let's look at the intraday really quick. We don't quite often look at this. We'll look at the lower one, the 5-minute chart. You can kind of see this action right off the get-go, a huge gap down, and then a rally for almost the first hour of the day, then a sell-off, then a rally, and then kind of just volatility sort of shrunk throughout the day as price was agreed upon. But just looking at kind of where we've come from, if I can get this to kind of come in a little bit. That's all the data we're going to get is that many days. So, but it's been pretty choppy. We have, last week's gap, last week's sell-off at the end, a gap up, and then, what looked like we were getting some strength, turned into some weakness. So definitely bouncing around a lot. We made some major moves in the portfolio. Let's look at the ultra aggressive, reducing our SSO exposure. It's just kind of tough when we have a gap down like that. You don't really want to sell. The market was rallying like we talked about. So maybe that's the bottom, and then kind of a sell back off, never violating the bottom of the day. We still have some crowd strike. We didn't do any changes on this today. As you can see, it's still changing inside of the range. Flex, a nice position yesterday and closed very decently. So we still have that one. MRVL was one of the big losers on the day. And you can see just very low in the cycle. So we had to reduce MRVL. We had to reduce MU. Also, we just can't take it down 13% today. Just can't take this, this kind of volatility that we're in. Although it looks good, it's just so, the ADR is just so high right now, and a daily swing of 7% on average. Just getting too wild for us. Let's look at SpaceX really quick. And you can see SpaceX all the way down to below where it opened at. And Maybe this thing creates kind of a consolidation and wants to turn back up. That's what we'll be looking at there. That's what I got for you today. Take care. We'll be right back at it tomorrow.